Question 1. Does a derivative product needing special risk awareness point to which SIE tested answer in full SIE exam? Option A. Options remove all market risk. Option B. Options guarantee dividends. Option C. Options are not suitable for every investor. Option D. Options are insured by SIPC against losses. The correct answer is option C. Options are not suitable for every investor. Options can involve leverage, expiration, and assignment risk, so they are not suitable for every investor. They do not remove all market risk, SIPC does not insure against trading losses, and options do not guarantee dividends. Question 2. If a full SIE exam STEM gives only a fund investing in short-term high-quality instruments, which answer is safest? Option A. Growth fund. Option B. Variable annuity. Option C. Closed-end bond fund. Option D. Money market fund. The correct answer is option D. Money market fund. A money market fund invests in short-term, high-quality debt instruments and seeks stability. A growth fund targets appreciation, a closed-end bond fund trades on an exchange, and a variable annuity is an insurance contract. Question 3. Which exam-tested phrase in full SIE exam is linked to the account holding variable annuity investment options? Option A. General account. Option B. Separate account. Option C. Special memorandum account. Option D. Sinking fund. The correct answer is option B. Separate account. The separate account holds variable annuity investment portfolios. The general account backs fixed guarantees, a sinking fund retires debt, and SMA is a margin account concept. Question 4. How should a candidate classify losses from a passive program generally limited against passive income in full SIE exam? Option A. Wash sale rule. Option B. SIPC advance. Option C. Dividend exclusion. Option D. Passive loss limitation. The correct answer is option D. Passive loss limitation. Passive loss limits affect how DPP losses may be used for tax purposes. Wash sale rules apply to securities losses, dividend exclusion is not the DPP rule, and SIPC advances relate to failed brokerage firms. Question 5. During full SIE exam practice, what does bank deposit insurance not covering stocks or bonds describe? Option A. MSRB pays failed broker claims. Option B. FINRA insures bank accounts. Option C. FDIC does not insure securities. Option D. SIPC guarantees market gains. The correct answer is option C. FDIC does not insure securities. FDIC insurance applies to eligible bank deposits, not securities such as stocks, bonds, or mutual funds. SIPC does not guarantee market gains, FINRA is not a bank insurer, and the MSRB does not pay customer claims after broker failure. Question 6. Choose carefully in full SIE exam. An over-the-counter security with limited market depth defines which term? Option A. FDIC risk. Option B. OTC liquidity risk. Option C. Annuity mortality risk. Option D. Roth conversion risk. The correct answer is option B. OTC liquidity risk. Some OTC securities can have limited market depth, creating liquidity risk. FDIC, Roth conversion, and annuity mortality risks are unrelated. Question 7. For full SIE exam practice, which option turns a separate cash limit within SIPC customer protection into the correct term as a trading application? Option A. Municipal tax guarantee. Option B. Unlimited cash insurance. Option C. SIPC cash sublimit. Option D. Treasury PR guarantee. The correct answer is option C. SIPC cash sublimit. SIPC coverage has a customer protection limit with a smaller cash sublimit. It is not unlimited cash insurance, a Treasury PR guarantee, or a municipal tax guarantee. Question 8. If a full SIE exam STEM gives only price control that may prevent the order from being filled, which answer is safest? Option A. Guaranteed fill. Option B. Limit order execution risk. Option C. Firm commitment. Option D. Automatic dividend. The correct answer is option B. Limit order execution risk. Limit orders protect price but may not execute if the market does not reach the limit. Guaranteed fills, dividends, and firm commitment underwriting do not describe this order risk. Question 9. A short full SIE exam question says a customer losing money because securities declined in value. Which option wins? Option A. Full SIPC reimbursement. Option B. No SIPC market loss coverage. Option C. FDIC stock insurance. Option D. MSRB loss payment. The correct answer is option B. No SIPC market loss coverage. SIPC does not protect customers from ordinary market losses. FDIC stock insurance and MSRB loss payments do not cover declining securities prices either. Question 10. Which full SIE exam answer is hidden inside the clue a stop order executing far from the stop price after a price gap? Option A, guaranteed limit price. Option B, stop order gap risk. Option C, guaranteed stop price. Option D, guaranteed dividend. The correct answer is option B, stop order gap risk. A stop order becomes a market order, so a price gap can cause execution away from the stop price. It does not guarantee the stop price, a limit price, or dividends. Question 11. After reading charging an advisory fee for ongoing portfolio advice, which full SIE exam concept should not be confused with distractors? Option A, sales concession only. Option B, bond coupon. Option C, markup only. Option D, advisory fee arrangement. The correct answer is option D, advisory fee arrangement. Advisory fees compensate investment advice or management services. Markups and concessions are transaction compensation, while bond coupons are issuer interest payments. Question 12. A quick-fire full SIE exam video asks about the exchange participant helping maintain a fair and orderly market. Which answer fits? Option A, custodian. Option B, options holder. Option C, designated market maker. Option D, transfer agent. The correct answer is option C, designated market maker. A designated market maker helps maintain fair and orderly trading in assigned exchange-listed securities. A transfer agent keeps records, an options holder owns a contract right, and a custodian holds assets. Question 13. For full SIE exam practice, which option turns a large market order moving through several price levels into the correct term? Option A, proxy contest. Option B, accrued interest. Option C, tax equivalent yield. Option D, market impact risk. The correct answer is option D, market impact risk. A large market order may move the price as it executes through available quotes. Accrued interest, tax equivalent yield, and proxy contests are unrelated. Question 14. How should a candidate classify compensation tied to investment gains under advisory rules in full SIE exam? Option A, bond coupon. Option B, sales load. Option C, performance-based fee. Option D, markup. The correct answer is option C, performance-based fee. Performance-based fees are advisory compensation tied to results and are subject to rules. Coupons, loads, and markups are different compensation or income items. Question 15. What should stand out in a full SIE exam STEM about few buyers and sellers available for a security? Option A, liquidity risk. Option B, currency risk. Option C, credit risk. Option D, inflation risk. The correct answer is option A, liquidity risk. Liquidity risk is the risk that a security cannot be sold quickly at a fair price. Inflation, credit, and currency risk describe different concerns. Question 16. Which answer would pass an exam day check for securities trading away from a listed exchange in full SIE exam? Option A, auction market. Option B, over-the-counter market. Option C, dividend market. Option D, primary market. The correct answer is option B, over-the-counter market. The over-the-counter market covers securities traded outside a centralized exchange listing. The primary market issues new securities, an auction market matches exchange orders, and dividend market is not a standard SIE market category. Question 17. A SIE full SIE exam item describes protection when a broker-dealer fails and customer securities are missing. Which answer fits? Option A, FDIC insurance. Option B, SEC performance guarantee. Option C, MSRB guarantee. Option D, SIPC protection. The correct answer is option D, SIPC protection. SIPC protection applies when a broker-dealer fails and customer assets are missing. FDIC covers bank deposits, MSRB does not guarantee investments, and the SEC does not guarantee performance. Question 18. During full SIE exam practice, what does being paid to give securities advice as a business describe? Option A, investment advisor. Option B, issuer. Option C, broker-dealer only. Option D, transfer agent. The correct answer is option A, investment advisor. An investment advisor is generally paid for securities advice as a business. Broker-dealers execute securities business, transfer agents track ownership, and issuers create securities. Question 19. Imagine a test item says work outside the firm that must be disclosed under firm rules. What is the best full SIE exam answer? Option A, ex-dividend date. Option B, outside business activity. Option C, currency risk. Option D, cash settlement. The correct answer is option B, outside business activity. Outside business activity must be disclosed so the firm can supervise potential conflicts. Cash settlement is same-day settlement, currency risk comes from exchange rates, and ex-dividend date affects dividend entitlement. Question 20. Pick the SIE term connected to an order requiring prompt handling without time-price discretion in full SIE exam. Option A, GTC order. Option B, held order. Option C, not held order. Option D, discretionary order. The correct answer is option B, held order. A held order must be handled promptly under the customer's instructions. A not held order gives time and price discretion, GTC describes duration, and a discretionary order allows broader trading decisions only with authorization. Question 21. A short full SIE exam question says a client disclosure document explaining advisory services, fees and conflicts, which option wins? Option A, margin call. Option B, advisor brochure. Option C, option agreement. Option D, official statement. The correct answer is option B, advisor brochure. An advisor brochure discloses advisory services, fees and conflicts to clients. Official statements, option agreements, and margin calls are unrelated. Question 22. A candidate sees a firm in the business of securities transactions for customers or itself during full SIE exam review. What should they choose? Option A, custodian only. Option B, issuer only. Option C, broker-dealer. Option D, investment advisor only. The correct answer is option C, broker-dealer. A broker-dealer conducts securities transactions as agent, principal, or both. An investment advisor is paid for advice, an issuer sells its own securities, and a custodian holds assets. Question 23. Which answer would pass an exam day check for a bearish or protective options position in full SIE exam? Option A, long call. Option B, bull spread only. Option C, long put. Option D, covered call. The correct answer is option C, long put. A long put benefits when the underlying falls and can also protect a stock position. A long call is bullish, a covered call involves selling calls against owned stock, and a bull spread is a different multi-leg strategy. Question 24. Which full SIE exam answer is hidden inside the clue a transaction that creates a new short options position? Option A, opening purchase. Option B, exercise. Option C, closing purchase. Option D, opening sale. The correct answer is option D, opening sale. An opening sale writes an option and creates a short position. An opening purchase creates a long position, a closing purchase exits a short position, and exercise uses the option right. Question 25. Why would a U.S. traded certificate representing foreign shares lead to one specific full SIE exam answer as a compliance clue? Option A, ADR. Option B, T-bill. Option C, UIT. Option D, REIT. The correct answer is option A, ADR. An ADR allows U.S. investors to trade a certificate representing shares of a foreign company. A REIT owns real estate assets, a UIT holds a fixed investment portfolio, and a T-bill is short-term U.S. government debt. Question 26. Does selling a call while owning the underlying stock point to which SIE tested answer in full SIE exam? Option A, long put. Option B, protective put. Option C, covered call. Option D, naked call. The correct answer is option C, covered call. A covered call involves writing a call while owning the underlying shares. A naked call lacks the stock position, a long put is a bearish right to sell, and a protective put ensures own stock. Question 27. Pick the SIE term connected to a dispute resolution process often used for customer-broker disputes in full SIE exam. Option A, arbitration. Option B, hypothecation. Option C, annuitization. Option D, underwriting. The correct answer is option A, arbitration. Arbitration is a formal dispute resolution process used in the securities industry. Underwriting distributes new issues, annuitization converts annuity value to payments, and hypothecation pledges margin securities. Question 28. A candidate sees an exchange using an auction market and designated market makers during full SIE exam review. What should they choose? Option A, OTC Pink. Option B, NYSE. Option C, money market. Option D, NASDAQ. The correct answer is option B, NYSE. The NYSE is an auction-style exchange with designated market makers supporting orderly trading. NASDAQ is a dealer/electronic market, OTC Pink is an over-the-counter quotation venue, and the money market involves short-term debt. Question 29. Under SIE conditions, how should mixing customer securities with firm securities improperly be labeled in full SIE exam? Option A, breakpoint. Option B, annuitization. Option C, diversification. Option D, commingling. The correct answer is option D, commingling. Commingling customer and firm assets improperly violates customer protection principles. Diversification spreads risk, breakpoints reduce sales charges, and annuitization creates income payments. Question 30. During full SIE exam practice, what does the investment account supporting a variable annuity describe? Option A, margin account. Option B, transfer agent account. Option C, separate account. Option D, general account. The correct answer is option C, separate account. A variable annuity uses a separate account for investment options, so the owner bears investment risk. The general account supports fixed guarantees, a margin account involves borrowing, and a transfer agent account is not the annuity investment account. Question 31. Before recording a lesson on full SIE exam, which term explains a dealer selling from inventory above the prevailing market price? Option A, expense ratio. Option B, markup. Option C, dividend. Option D, commission. The correct answer is option B, markup. A markup is added when a dealer sells a security to a customer from inventory. A commission compensates agency trades, a dividend is an issuer payment to shareholders, and an expense ratio is a fund cost. Question 32. During full SIE exam practice, what does a liquidation process using a trustee to return customer property describe as a risk angle? Option A, underwriting syndicate. Option B, proxy committee. Option C, SIPC trustee process. Option D, transfer syndicate. The correct answer is option C, SIPC trustee process. A SIPC liquidation may involve a trustee working to return customer property. Syndicates and proxy committees have different roles. Question 33. Pick the SIE term connected to a customer losing money because a recommendation performed poorly in full SIE exam as a last-minute review. Option A, full SIPC protection. Option B, no coverage for bad investment advice. Option C, FDIC reimbursement. Option D, MSRB reimbursement. The correct answer is option B, no coverage for bad investment advice. SIPC does not cover losses from bad advice or poor investment performance. FDIC and MSRB reimbursement do not cover that securities loss either. Question 34. For full SIE exam practice, which option turns information a reasonable investor would consider important into the correct term? Option A, nominal value. Option B, public rumor. Option C, material information. Option D, PR quotation. The correct answer is option C, material information. Material information is information a reasonable investor would likely consider important in making an investment decision. A public rumor may be unreliable, nominal value is not the test, and PR quotation relates to bond pricing. Question 35. Why would a firm arranging a trade for a customer and charging a commission lead to one specific full SIE exam answer? Option A, issuer acting as seller. Option B, broker acting as agent. Option C, transfer agent acting as record keeper. Option D, dealer acting as principal. The correct answer is option B, broker acting as agent. A broker acting as agent executes on behalf of a customer and is compensated by commission. A dealer acts as principal from inventory, an issuer sells its own securities, and a transfer agent maintains ownership records. Question 36. If a full SIE exam STEM gives only receiving premium and taking on an exercise obligation, which answer is safest? Option A, option buyer. Option B, bond holder. Option C, option writer. Option D, rights holder. The correct answer is option C, option writer. An option writer receives premium and must perform if assigned. An option buyer has a right, a bond holder owns debt, and a rights holder may buy new stock but does not have an options assignment obligation. Question 37. Which full SIE exam concept separates a graph comparing yields across maturities for similar bonds from the other choices? Option A, fund prospectus. Option B, yield curve. Option C, order book. Option D, proxy ballot. The correct answer is option B, yield curve. A yield curve shows yields by maturity for similar debt securities. An order book shows trading interest, a prospectus describes an offering, and a proxy ballot records shareholder votes. Question 38. A candidate sees customer shares missing from the records of a failed broker-dealer during full SIE exam review. What should they choose? Option A, dividend preference. Option B, missing securities claim. Option C, market loss claim. Option D, tax loss claim. The correct answer is option B, missing securities claim. SIPC protection is aimed at missing securities and cash at a failed firm. Market losses, tax losses, and dividend preferences are not the same claim. Question 39. Choose carefully in full SIE exam. Low trading volume making it harder to sell quickly defines which term. Option A, tax bracket risk. Option B, voting risk. Option C, low volume liquidity risk. Option D, high coupon risk. The correct answer is option C, low volume liquidity risk. Low volume can make selling harder without price concessions. Coupon, voting, and tax bracket risks are different. Question 40. If a full SIE exam STEM gives only ongoing compensated advice rather than mainly trade execution, which answer is safest? Option A, investment advisor role. Option B, issuer role. Option C, broker-dealer execution role. Option D, transfer agent role. The correct answer is option A, investment advisor role. Investment advisors are associated with compensated advice. Broker-dealers mainly affect securities transactions, transfer agents keep ownership records, and issuers create securities. Question 41. Suppose the exam STEM says a fee for withdrawing too much too early from an annuity, which full SIE exam answer is strongest? Option A, markup. Option B, bond discount. Option C, 12b1 fee. Option D, surrender charge. The correct answer is option D, surrender charge. A surrender charge penalizes early annuity withdrawals during a surrender period. Markups are dealer charges, 12b1 fees are fund distribution expenses, and bond discounts refer to price below par. Question 42. Which answer would pass an exam day check for a REIT that does not trade on an exchange and may be difficult to sell in full SIE exam? Option A, Treasury liquidity. Option B, SIPC liquidation. Option C, non-traded REIT liquidity risk. Option D, ETF arbitrage. The correct answer is option C, non-traded REIT liquidity risk. Non-traded rights can create liquidity concerns because shares may not have an active exchange market. Treasury liquidity, SIPC liquidation, and ETF arbitrage involve other areas. Question 43. For full SIE exam practice, which option turns investors trading outstanding shares with each other into the correct term? Option A, private placement. Option B, treasury auction. Option C, secondary market. Option D, primary market. The correct answer is option C, secondary market. The secondary market is where existing securities trade between investors after issuance. The primary market sells new securities, a private placement sells directly to selected investors, and a treasury auction is a government issuance process. Question 44. A quick-fire full SIE exam video asks about a broker-dealer recommendation standard focused on the retail customer's best interest. Which answer fits? Option A, Investment Company Act only. Option B, SIPC rule. Option C, Regulation Best Interest. Option D, MSRB markup rule. The correct answer is option C, Regulation Best Interest. Regulation Best Interest applies to broker-dealer recommendations to retail customers. Investment Company, SIPC, and MSRB markup rules do not define this standard. Question 45. What should stand out in a full SIE exam STEM about an insurance contract whose value changes with separate account investments? Option A, variable annuity. Option B, fixed annuity. Option C, money market fund. Option D, treasury bond. The correct answer is option A, variable annuity. A variable annuity's value depends on the performance of separate account investments. A fixed annuity provides insurer guarantees, a money market fund is an investment company product, and a treasury bond is government debt. Question 46. Can you spot the full SIE exam answer when the clue is insurance with cash value tied to separate account performance? Option A, closed-end fund. Option B, treasury bond. Option C, variable life insurance. Option D, fixed annuity. The correct answer is option C, variable life insurance. Variable life insurance involves investment risk because cash value depends on separate account performance. Fixed annuities provide insurer guarantees, treasury bonds are government debt, and closed-end funds are investment companies. Question 47. During full SIE exam practice, what does short-term rates higher than long-term rates describe? Option A, normal yield curve. Option B, cumulative dividend. Option C, flat tax rate. Option D, inverted yield curve. The correct answer is option D, inverted yield curve. An inverted yield curve occurs when short-term yields are above long-term yields. A normal curve generally slopes upward. Flat tax rate is not a yield curve term, and cumulative dividend belongs to preferred stock. Question 48. A quick-fire full SIE exam video asks about returning customer securities held in street name after a firm liquidation. Which answer fits? Option A, issuer buyback. Option B, prospectus refund. Option C, customer asset return. Option D, bond call. The correct answer is option C, customer asset return. SIPC liquidation aims to return customer securities and cash when a brokerage firm fails. Issuer buybacks, prospectus refunds, and bond calls are separate processes. Question 49. Which answer would pass an exam day check for law creating customer protection through SIPC when broker-dealers fail in full SIE exam? Option A, Securities Act of 1933. Option B, Regulation T. Option C, Securities Investor Protection Act. Option D, Blue Sky Law. The correct answer is option C, Securities Investor Protection Act. The Securities Investor Protection Act created SIPC protection for customers of failed broker-dealers. The 1933 Act covers new issue disclosure, Regulation T covers credit, and Blue Sky laws are state securities laws. Question 50. Which full SIE exam clue points to securities business done away from the firm that requires prior notice or approval? Option A, good delivery. Option B, public appearance. Option C, cash account. Option D, private securities transaction. The correct answer is option D, private securities transaction. A private securities transaction involves securities activity outside the regular firm channel and requires firm notice or approval. Public appearance is a communication category, cash account is an account type, and good delivery concerns settlement requirements. Question 51. How should a candidate classify a brokerage firm liquidation rather than an issuer bankruptcy in full SIE exam? Option A, broker-dealer failure. Option B, corporate earnings miss. Option C, issuer default. Option D, municipal default. The correct answer is option A, broker-dealer failure. SIPC is tied to broker-dealer failure and missing customer assets. Issuer default, municipal default, and earnings misses are investment risks. Question 52. Pick the SIE term connected to a demand to deposit cash or securities when equity is too low in full SIE exam. Option A, proxy request. Option B, trade confirmation. Option C, margin call. Option D, dividend notice. The correct answer is option C, margin call. A margin call requires a customer to add equity when margin requirements are not met. Dividend notices involve distributions, trade confirmations report executions, and proxy requests relate to voting. Question 53. During full SIE exam practice, what does cash coverage being part of the overall SIPC protection amount describe? Option A, ETF expense limit. Option B, unlimited cash coverage. Option C, cash sublimit. Option D, bond coupon limit. The correct answer is option C, cash sublimit. SIPC cash protection is subject to a sublimit within the overall protection amount. The other choices are not SIPC coverage rules. Question 54. After reading buying a put to protect stock already owned, which full SIE exam concept should not be confused with distractors? Option A, covered call. Option B, short put. Option C, long call only. Option D, protective put. The correct answer is option D, protective put. A protective put uses a long put to limit downside on a stock position. A covered call sells upside, a short put creates a purchase obligation, and a long call is bullish without owning the stock. Question 55. When full SIE exam review mentions one fee covering advisory services and transaction costs, which term applies? Option A, breakpoint schedule. Option B, bond ladder. Option C, wrap fee program. Option D, SIPC advance. The correct answer is option C, wrap fee program. A wrap fee program charges one fee for advisory and related services. Breakpoints, bond ladders, and SIPC advances are unrelated. Question 56. Does a dealer buying into inventory below the prevailing market price point to which SIE tested answer in full SIE exam? Option A, markdown. Option B, accrued interest. Option C, management fee. Option D, sales load. The correct answer is option A, markdown. A markdown applies when a dealer buys a security from a customer into inventory below the prevailing market price. A sales load is a mutual fund charge, accrued interest belongs to bond pricing, and a management fee pays a fund advisor. Question 57. Review the scenario of communication implying returns that are not properly supported. Which full SIE exam choice matches? Option A, balanced presentation. Option B, official statement. Option C, trade confirmation. Option D, misleading projection. The correct answer is option D, misleading projection. Misleading projections can violate communication standards because investors may be misled about likely returns. Balanced presentation includes risks, official statements disclose municipal offerings, and trade confirmations report executed trades. Question 58. Pick the SIE term connected to identifying and addressing conflicts in a retail recommendation in full SIE exam. Option A, ETF redemption. Option B, CTR filing. Option C, bond accretion. Option D, conflict obligation. The correct answer is option D, conflict obligation. Reg BI includes obligations around conflicts of interest. CTR filings, bond accretion, and ETF redemption are separate topics. Question 59. Review the scenario: a written statement alleging a sales practice violation. Which full SIE exam choice matches? Option A, QZIP request. Option B, customer complaint. Option C, tombstone ad. Option D, trade confirmation. The correct answer is option B, customer complaint. A customer complaint is a written allegation of misconduct or sales practice concern. Trade confirmations report transactions, tombstone ads announce offerings, and QZIP requests identify securities. Question 60. Can you spot the full SIE exam answer when the clue is the federal agency enforcing securities laws? Option A, FDIC. Option B, FINRA. Option C, MSRB. Option D, SEC. The correct answer is option D, SEC. The SEC enforces federal securities laws and oversees the securities markets. FINRA regulates broker-dealers, the MSRB writes municipal securities rules, and the FDIC ensures bank deposits rather than securities. Question 61. Which full SIE exam answer is hidden inside the clue up to $500,000 of brokerage protection including $250,000 cash? Option A, FDIC standard deposit limit. Option B, SIPC coverage limit. Option C, MSRB markup limit. Option D, Reg T margin limit. The correct answer is option B, SIPC coverage limit. SIPC coverage is commonly tested as up to $500,000 per separate customer, including a $250,000 limit for cash. FDIC limits apply to bank deposits. Regulation T covers margin credit, and MSRB markup limit is not the tested protection figure. Question 62. Imagine a test item says the anti-fraud rule often linked to deceptive securities practices. What is the best full SIE exam answer? Option A, Rule 144. Option B, SIPC Rule 500. Option C, Rule 10b-5. Option D, Regulation T. The correct answer is option C, Rule 10b-5. Rule 10b-5 is a major anti-fraud rule used against deceptive practices, including insider trading. Rule 144 covers resales, Regulation T covers credit, and SIPC Rule 500 is not the standard SIE anti-fraud answer. Question 63. Which exam-tested phrase in full SIE exam is linked to difficulty quickly selling an interest in a partnership program? Option A, reinvestment risk. Option B, illiquidity risk. Option C, call risk. Option D, currency risk. The correct answer is option B, illiquidity risk. DPP interests are often illiquid, so selling quickly may be difficult. Call risk involves early bond redemption, reinvestment risk involves replacing income, and currency risk involves exchange rates. Question 64. Which answer would pass an exam day check for using reasonable diligence and care when making a recommendation in full SIE exam? Option A, dividend election. Option B, care obligation. Option C, registration termination. Option D, custody only. The correct answer is option B, care obligation. The care obligation requires reasonable diligence and care in recommendations. Custody, termination, and dividend elections do not describe this Reg BI requirement. Question 65. During full SIE exam practice, what does holding or having access to client funds or securities describe? Option A, coupon custody only. Option B, proxy custody only. Option C, syndicate custody. Option D, custody of client assets. The correct answer is option D, custody of client assets. Custody means holding or having access to client assets and creates regulatory obligations. The other choices do not describe advisory custody. Question 66. How should a candidate classify a wide bid-ask spread increasing the cost of selling in full SIE exam? Option A, reinvestment risk. Option B, call risk. Option C, liquidity risk. Option D, tax risk. The correct answer is option C, liquidity risk. Wide bid-ask spreads can signal poor liquidity and higher trading cost. Call, reinvestment, and tax risk do not describe this trading problem. Question 67. Pick the SIE term connected to an order giving the broker time and price discretion in full SIE exam. Option A, held order. Option B, day order. Option C, market order. Option D, not held order. The correct answer is option D, not held order. A not held order gives the broker discretion over time and price but not over the security, side, or size. A held order must be handled promptly, a market order prioritizes execution, and a day order only sets duration. Question 68. Which choice best matches coverage tied to accounts at member broker-dealers on a full SIE exam question? Option A, bank savings account. Option B, commodity pool only. Option C, SIPC member firm account. Option D, insurance policy claim. The correct answer is option C, SIPC member firm account. SIPC protection applies through member broker-dealers. Bank accounts, insurance claims, and commodity pools are not the core SIPC customer account coverage. Question 69. Suppose the exam stem says a position where losses can grow as the stock rises. Which full SIE exam answer is strongest? Option A, long put. Option B, short stock position. Option C, long stock position. Option D, treasury bill. The correct answer is option B, short stock position. A short stock position has theoretically unlimited loss potential because a stock price can keep rising. A long put has loss limited to premium, a long stock position can lose only down to zero, and a treasury bill is short-term debt. Question 70. When full SIE exam review mentions selling borrowed shares and hoping to buy them back lower, which term applies? Option A, covered call. Option B, short sale. Option C, long purchase. Option D, rights offering. The correct answer is option B, short sale. A short sale involves borrowing shares, selling them, and hoping to repurchase them at a lower price. A long purchase profits from rising prices, a covered call is an option strategy, and a rights offering is a primary market shareholder right. Question 71. Look closely at the usual 50% initial equity requirement for buying stock on margin. Which full SIE exam answer should be selected? Option A, MSRB Rule G37. Option B, Rule 144. Option C, Regulation T. Option D, SIPC rule. The correct answer is option C, Regulation T. Regulation T sets the initial margin requirement for many securities purchases, commonly tested at 50% for stocks. SIPC rules protect customers after firm failure. MSRB Rule G37 covers municipal political contributions, and Rule 144 governs restricted and control stock resales. Question 72. After reading documenting how much investment loss a customer can accept, which full SIE exam concept should not be confused with distractors? Option A, CUSIP number. Option B, risk tolerance. Option C, coupon rate. Option D, syndicate spread. The correct answer is option B, risk tolerance. Risk tolerance is a key customer profile fact for recommendations. Coupon rates, CUSIP numbers, and syndicate spreads are product or offering details. Question 73. A candidate sees a customer relationship summary for retail investors during full SIE exam review. What should they choose? Option A, Form U5. Option B, Form U4. Option C, Form CRS. Option D, Form 10K. The correct answer is option C, Form CRS. Form CRS gives retail investors a relationship summary. Form U4 and U5 relate to broker registration, while Form 10K is an issuer annual report. Question 74. Which answer would pass an exam day check for a representative doing securities business outside the firm without approval in full SIE exam? Option A, pegging. Option B, selling away. Option C, front running. Option D, hypothecation. The correct answer is option B, selling away. Selling away occurs when a representative participates in outside securities transactions without proper firm notice or approval. Front-running trades ahead of orders, pegging manipulates prices, and hypothecation pledges margin securities. Question 75. If a full SIE exam stem gives only a need to check risk tolerance, liquidity needs, and tax situation before recommending a DPP, which answer is safest? Option A. Tender offer filing. Option B. DPP suitability review. Option C. Automatic approval. Option D. FDIC verification. The correct answer is option B. DPP suitability review. DPPs require careful suitability review because they may be illiquid, complex, and tax-driven. They are not automatically approved for every customer. FDIC verification concerns bank deposits, and tender offer filings are separate. Question 76. How should a candidate classify commodity futures contracts outside normal SIPC securities protection in full SIE exam? Option A. SIPC stock coverage. Option B. SIPC bond coverage. Option C. SIPC cash coverage. Option D. No SIPC futures coverage. The correct answer is option D. No SIPC futures coverage. SIPC focuses on securities and cash and brokerage accounts, not ordinary commodity futures contracts. Stocks, cash, and bonds may be within the normal customer asset framework. Question 77. Which answer would pass an exam day check for a firm selling securities from its own inventory with a markup in full SIE exam? Option A. Dealer acting as principal. Option B. Broker acting as agent. Option C. Investment advisor acting as fiduciary. Option D. Clearing agency acting as custodian. The correct answer is option A. Dealer acting as principal. A dealer acts as principal when it trades from its own account and earns a markup or markdown. A broker earns a commission as agent, an advisor is paid for advice, and a clearing agency supports settlement rather than selling inventory. Question 78. After reading limits on business-related gifts to prevent conflicts of interest, which full SIE exam concept should not be confused with distractors? Option A. Breakpoint discount. Option B. Margin interest. Option C. Gifts and gratuities limit. Option D. Dividend exclusion. The correct answer is option C. Gifts and gratuities limit. Gift and gratuity limits help reduce conflicts and improper influence. Breakpoint discounts reduce mutual fund sales charges, dividend exclusion is a tax concept, and margin interest is charged on borrowed funds. Question 79. If a full SIE exam STEM gives only the minimum equity a long margin account must keep, which answer is safest? Option A. Loan consent. Option B. Initial margin. Option C. Maintenance margin. Option D. Sales charge. The correct answer is option C. Maintenance margin. Maintenance margin is the minimum equity that must remain in a margin account after purchase. Initial margin applies at the time of purchase, sales charge is a fund cost, and loan consent allows securities lending but is not the equity minimum. Question 80. Look closely at wrongfully taking or using customer funds or securities. Which full SIE exam answer should be selected? Option A. Hypothecation. Option B. Redemption. Option C. Conversion. Option D. Reinvestment. The correct answer is option C. Conversion. Conversion is the wrongful use or taking of customer property. Hypothecation pledges securities in a margin account, reinvestment uses income to buy more securities, and redemption is selling fund shares back to the issuer. Question 81. When full SIE exam review mentions thin trading outside regular hours increasing execution uncertainty, which term applies? Option A. After hours market order risk. Option B. Bond call risk. Option C. FDIC risk. Option D. Wash sale risk. The correct answer is option A. After hours market order risk. Market orders outside regular hours can face wider spreads and less liquidity. FDIC, bond call, and wash sale risks are different. Question 82. Imagine a test item says limited protection for missing securities and cash at a failed brokerage firm. What is the best full SIE exam answer? Option A. Unlimited market protection. Option B. Issuer guarantee. Option C. SIPC coverage limit. Option D. FDIC bank limit. The correct answer is option C. SIPC coverage limit. SIPC provides limited protection for missing customer assets when a brokerage firm fails. It does not provide unlimited market protection, FDIC bank coverage, or issuer guarantees. Question 83. During full SIE exam practice, what does protection that does not guarantee investment value describe? Option A. No performance guarantee. Option B. Guaranteed profit. Option C. Guaranteed yield. Option D. Guaranteed tax result. The correct answer is option A. No performance guarantee. SIPC does not guarantee profits, yields, or investment value. It is a customer asset protection system for failed broker-dealers. Question 84. Suppose the exam STEM says the risk of missing a better return elsewhere. which full SIE exam answer is strongest? Option A, opportunity cost. Option B, currency risk. Option C, credit risk. Option D, regulatory risk. The correct answer is option A, opportunity cost. Opportunity cost is the benefit given up by choosing one investment over another. Credit risk is default risk, currency risk comes from exchange rates, and regulatory risk comes from rule changes. Question 85. A candidate sees a fast-moving market causing execution far from the last quoted price during full SIE exam review. What should they choose? Option A, dividend adjustment. Option B, breakpoint discount. Option C, bond amortization. Option D, market order slippage. The correct answer is option D, market order slippage. Market order slippage can occur when prices move quickly before execution. Dividend adjustments, amortization, and breakpoint discounts are unrelated. Question 86. When full SIE exam review mentions the central bank influencing money supply and interest rates, which term applies? Option A, Federal Reserve Board. Option B, transfer agent. Option C, SIPC. Option D, MSRB. The correct answer is option A, Federal Reserve Board. The Federal Reserve Board influences monetary policy, money supply, and interest rates. SIPC protects brokerage customers after firm failure, the MSRB writes municipal rules, and a transfer agent tracks securities ownership. Question 87. Under SIE conditions, how should placing a retail customer's interest ahead of the representative's interest be labeled in full SIE exam? Option A, MSRB Rule G17. Option B, Regulation Best Interest. Option C, Regulation T. Option D, Rule 144. The correct answer is option B, Regulation Best Interest. Regulation Best Interest requires broker-dealers and associated persons to act in a retail customer's best interest when making recommendations. Regulation T covers credit, Rule 144 covers restricted and control stock, and MSRB Rule G17 is a municipal fair dealing rule. Question 88. Under SIE conditions, how should an annuity with value tied to separate account investment performance be labeled in full SIE exam? Option A, common stock only. Option B, variable annuity. Option C, treasury bond. Option D, fixed annuity. The correct answer is option B, variable annuity. A variable annuity's value depends on separate account investments and carries market risk. A fixed annuity has insurer-backed credited interest, a treasury bond is debt, and common stock alone is not an insurance contract. Question 89. Choose carefully in full SIE exam. Price protection at the cost of possible non-execution defines which term? Option A, stop order trigger. Option B, market order certainty. Option C, proxy authority. Option D, limit order trade-off. The correct answer is option D, limit order trade-off. The limit order trade-off is price control versus possible non-execution. Market orders seek certainty, stop orders use triggers, and proxy authority concerns voting. Question 90. A candidate sees a stop limit order activating but not filling because the limit price is missed during full SIE exam review. What should they choose? Option A, guaranteed voting right. Option B, guaranteed market fill. Option C, guaranteed coupon. Option D, stop limit non-execution risk. The correct answer is option D, stop limit non-execution risk. Stop limit orders protect price but can miss execution after activation. They do not guarantee a market fill, coupon, or voting right. Question 91. Before recording a lesson on full SIE exam, which term explains the customer gets execution but not a guaranteed price? Option A, market order price risk. Option B, all or none restriction. Option C, limit price protection. Option D, stop price activation. The correct answer is option A, market order price risk. Market orders generally provide execution speed but not price certainty. Limit price protection, stop activation, and all or none restrictions describe different order features. Question 92. If a full SIE exam STEM gives only an electronic dealer market with competing market makers, which answer is safest? Option A, NASDAQ. Option B, municipal issuer. Option C, Treasury Direct. Option D, NYSE floor auction. The correct answer is option A, NASDAQ. NASDAQ is an electronic dealer market where market makers quote prices. The NYSE floor auction uses a different structure. Treasury Direct sells government securities, and a municipal issuer raises public funds. Question 93. Look closely at the self-regulatory organization for broker-dealers. Which full SIE exam answer should be selected? Option A, MSRB. Option B, SEC. Option C, SIPC. Option D, FINRA. The correct answer is option D, FINRA. FINRA is the self-regulatory organization that oversees broker-dealers and registered representatives. The SEC is the federal securities regulator, the MSRB focuses on municipal securities rules, and SIPC protects customers if a broker-dealer fails. Question 94. Identify the tested full SIE exam concept behind trading on material non-public information. Option A, insider trading. Option B, selling away. Option C, churning. Option D, breakpoint sale. The correct answer is option A, insider trading. Insider trading involves trading while using material non-public information. Selling away is unauthorized outside securities business, churning is excessive trading for commissions, and breakpoint sale avoids mutual fund discounts. Question 95. A quick-fire full SIE exam video asks about a bullish options position with limited loss to premium. Which answer fits? Option A, long call. Option B, covered put. Option C, long put. Option D, short stock. The correct answer is option A, long call. A long call benefits when the underlying rises and the buyer's loss is limited to the premium paid. A long put is bearish, short stock gains when prices fall, and covered put is not the basic bullish call position. Question 96. Which full SIE exam answer is hidden inside the clue hiding true ownership by placing securities in another account? Option A, dividend reinvestment. Option B, stock parking. Option C, stock split. Option D, rights offering. The correct answer is option B, stock parking. Stock parking hides ownership or control and is a prohibited practice. Stock splits change share count, rights offerings raise capital from shareholders, and dividend reinvestment buys additional shares. Question 97. A candidate sees units used to calculate variable annuity payments after annuitization during full SIE exam review. What should they choose? Option A, annuity units. Option B, voting shares. Option C, bond points. Option D, accumulation units. The correct answer is option A, annuity units. Annuity units determine variable annuity payouts during the payout phase. Accumulation units apply before annuitization, bond points quote bond prices, and voting shares relate to equity ownership. Question 98. What should stand out in a full SIE exam STEM about a duty to put the client's interests ahead of the advisor's interests? Option A, fiduciary duty. Option B, market making. Option C, firm commitment. Option D, suitability only. The correct answer is option A, fiduciary duty. Investment advisors are associated with a fiduciary duty to clients. Suitability only is a lower broker-dealer standard, market making quotes securities, and firm commitment is underwriting. Question 99. Under SIE conditions, how should protection if a broker-dealer fails and customer assets are missing be labeled in full SIE exam? Option A, SIPC protection. Option B, market loss insurance. Option C, FDIC insurance. Option D, bond rating guarantee. The correct answer is option A, SIPC protection. SIPC protects customers if a broker-dealer fails and securities or cash are missing, subject to limits. FDIC insurance covers bank deposits, market loss insurance is not provided, and bond ratings do not guarantee repayment. Question 100. Which answer would pass an exam day check for the required disclosure explaining standardized options risks in full SIE exam? Option A, proxy statement. Option B, options disclosure document. Option C, account statement. Option D, official statement. The correct answer is option B, options disclosure document. The options disclosure document explains standardized options and their risks before options trading is approved. Official statements belong to municipal offerings, proxy statements solicit votes, and account statements summarize account activity.